Hey, welcome everybody. Drew Newbold here with the command team at Keller Williams, and we've got a guest, Sam Collier, lender with RMS Mortgage, one of our great partners. Wanted to talk a little bit about what interest rates are currently doing, what refinancing is looking like, and answer a few other questions you have. So welcome, Sam.
Hey, what's going on?
Great to have you. So what's going on with interest rates? They're at an all-time low right now, right?
They sure are, showing no sign of stopping, but like I said, I can't really see them getting much lower. So if you have anyone on the fence about buying or refinancing, I would go ahead and pull the trigger while you can.
What are you locking people in at right now?
Conventional loan, 30-year fixed, 2.5 or lower. Our government loan pricing is really good right now. Everything's the lowest we've ever seen, but especially VA, FHA, USDA, locked in a VA loan at 2.25%. Could probably get a little bit lower with very small amount of discount points, which is just unheard of. I mean, it's as close to free money as you're going to get for 30 years.
Yeah, so you locked a VA loan in at 2.25. That's incredible.
Yeah, it's crazy.
What are you seeing a lot of refinancing still?
Yeah, not as much. Investors are keeping their rates artificially high to quell the volume a little bit. But, if you have anything above 3.5%, which, millions of Americans do, it probably makes sense to go ahead and pull the trigger. The key now is everyone wants something with the 2 in front of it, which was a lot easier to get 3 or 4 months ago than it is now. But you can still do it if you have really good credit.
Sure, gotcha. And what would happen to a buyer's buying power if rates increase, say, by 0.5% or a full percent? I know a lot of that has to do with your debt to income ratio, but what could that do for somebody's purchasing power?
Yeah, I mean, obviously it depends on the loan amount, but if we say $200,000 loan, the difference in principal and interest between 3% and 3.5% is $843 to $898. So it's $55. That equates to about $13,000 in purchasing power. So, it'd be the difference between, 150 and 163, maybe 165. If we go a full percentage point, just double it. So $26,000, which is pretty significant, as I'm sure as a realtor. There's everyone's competing for that 150 to 175. So if you can add that extra 25,000, if you can afford it, get over that hump into the 2s, it makes it a lot easier in terms of your options.
Yeah, and that can make a difference in the neighborhood that you're able to afford and buy in, maybe an extra additional bedroom or something like that, right?
Yep.
Cool. All right. Anything else you want anybody to know about?
That's it for now, man. Like I said, if you're considering purchasing or refining in the next couple months, I would, get on it, get on the ball, go ahead and lock it in while you can. We can't lock you in on a purchase till you get a contract. So get with your realtor, pound the pavement, find a house, get it under contract.
Sounds good. Thanks, Sam, for jumping on today. I'm going to put Sam's contact info in the comment section below. You'll be able to reach him. Again, he's a lender with RMS Mortgage. Again, thanks, Sam, for taking time out of your day and jumping on.
Anytime. Glad to be here.